Hello, everyone. Looks like we have a nice crowd today. Thank you for taking the time to join us in our panel today, X-raying new funding sources from the Asian capital markets. I didn't come up with this title, Jonathan Wolfsley did, so it's quite a mouthful. For those of you who don't know me, my name is Su Lin Heng. I'm a director with Eastil Secured. I run the transactions platform for Europe within Eastil. My other role within the company is also being part of the Asia team with our guys in Hong Kong, helping to bring capital from that part of the world into Europe and into the US. So without further ado, I'd like to introduce my distinguished panel, many of whom have actually traveled from Asia today. Thank you very much. To my right, we've got John Connolly, who is the head of UK development for Dorset Hospitality International Limited. John joined Dorset in 2011 and is responsible for the group's activities in hotel and residential developments. The company has currently acquired 5 development sites, totaling circa £400 million in construction costs, and are seeking more opportunities in the UK, particularly in London. To his right, the lovely Grace Leo, as Vice President of mainland Chinese conglomerate Rainwood Investments, award-winning hotelier Grace Leo is currently responsible for the planning and execution of a £300 million conversion of a heritage building, which is slated to be transformed to a 100-room luxury hotel, private club, and super prime residences. And next up, we have Mr. David Ling, the head of strategic development for CDL Hospitality Trust. David's current role includes identifying strategic investment opportunities for the regional and international markets for CDL. CDL HT is listed on the Singapore Stock Exchange, and its current asset portfolio comprises two resorts and 12 hotels worth over $2 billion. And last but not least, we have Mr. Alan Tang, who is the Chief Operating Officer for Frasers Hospitality Private Limited. Alan was appointed CEO of Frasers in 2013 to help oversee its operations with a key focus on developing the group's business growth and expansion strategy. Prior to Frasers, a lot of you might know, Alan was with GIC Real Estate from 1999 to 2013, where he headed the hospitality sector to help build a portfolio of global hotel assets. So that's who we have today. Lots of people filing in, some familiar faces. So before we kick off the Q&A session on the panel, just like to share a few slides to sort of set the scene for today's discussion. Oh, that's us. So pretty chart here. I think we're all here today because we all agree that Asian capital is really a powerhouse in Europe today. And last year alone, we saw over 15 billion euros invested in hotel real estate. As indicated by the very colorful map, we really see the hotspots being Hong Kong, Korea, Singapore, and of course, mainland China, where over the last 12 to 18 months, we've really seen heightened activity from the likes of the sovereign wealth funds, insurance companies, and also the developers. So in terms of the spectrum of the active investor groups today, I think we have 4 big categories. You've got the insurance companies, you've got the developers and the property companies, you've got the Asian sovereign wealth funds, and then you have the others, which include the strategic owner-operators, the REITs, the high net worth individuals. And I'm sure you guys would have seen a lot of these guys in the press recently. The likes of the Ambang Insurance from China that recently bought the Waldorf Astoria in New York for an eye-watering price of just under $2 billion. Jinjiang's group, which acquired Groupe de Louvre, the platform here in Europe, for over €1 billion as well. And then, on the high net worth individual side, we're very pleased to have done the St. Norman's Hotel sale with a group called Sunrider, which is a completely new group out of Taiwan. So I expect to see more out of them. So lots of activity. The outlook is looking very positive from the face of it. And this is going to be driven by a number of factors, including relaxation of cross-border investment restrictions. You've got the attractive sort of perceived risk return metrics as compared to the opportunities at home. And then you've got a very attractive foreign exchange and interest rate environment as well. So just a little bit to sort of put into context what we're talking about today. Let's just start with the panel. If I may, I think the big question on everyone's mind here, who's sitting here today, is really, is the current wave of Asian capital here to stay? You know, why are we hearing so much about it in the press? And, you know, what is going to cause more inflows coming into this part of the world from Asia? So we will kick off with ladies first. Grace? A lot of new money coming from mainland China, where Rainwood is based. Maybe give us your perspective, and will we see more activity from Rainwood this year?
Good afternoon, ladies and gentlemen. Thank you, Sulin. Yes, Europe and the UK has been recipient of many different cycles of investment monies. And at one point, just to jolt our memories, it was the Japanese, and it was the Mideast, and then the Russians, and more recently the Ukraine population as well. And some French and European investors as well. And every time with the arrival of new money from each of these countries, there's a great deal of speculation and curiosity about how and why they invest here. I think it's no surprise to anyone in this room that, you know, London in particular is a very active target for real estate investors, which obviously includes hospitality, and that the Chinese institutions are of no exception to this activity, which has stepped up, I think, over the past few years. Now, I say that because I don't think the Chinese investors are much more different than other nationality investors. We seem to be getting a lot of limelight these days, yeah. And I think the influx of the Chinese capital is clearly helped by the fact that domestic policies in China seem to be encouraging this overseas interest. And in terms of Rainwood, I would say that 10 Trinity Square, which is our first foray into overseas investment in London, whereby what you've just described earlier, it's mixed-use building within a heritage site, and it's the model that we'd like to go with for future acquisitions. There may not be many of those available, but this is where we'd like to continue, you know, to pursue our development. And another part of the activities of Rainwood is actually in the soft beverage business. I don't know whether our audience are aware, but Rainwood is the sole concession and distributor for Red Bull in China.
There's been a bit of drinking of that in this conference, maybe.
Yes, preferably with vodka.
Exactly.
And that's really, you know, done extremely well in China, and has given us, you know, tremendous revenue source. And just to think worthwhile mentioning that in the soft beverage business in the last year, you know, we took a very substantial stake in a healthy drink, which is called Vita Coco. For those of you who don't know what it is, it's a coconut water drink, and now I've become an addict. So
very good. And David, CDL has, you know, long established in Europe as well. Definitely seems as though you guys are stepping up your appetite of late, and, you know, with a particular focus into Europe. You know, what's really brought this about?
Okay, I think as a group, I'm talking about the CDL group itself. It's been has invested overseas for over 20 years. I mean, since the late 1980s, it's already came on board with the acquisition of a couple of hotels in London. And then subsequently in the 1990s, took over the Copthorne Hotel portfolio and the Millennium in the US. So put it together, becomes Millennium and Copthorne. So those were the times when we're already venturing abroad. I would say the principle is really just looking out for where the good deals are. And really, I mean, we've heard over the last 2 days, timing is right for acquisition in Europe, and therefore we are definitely keen to grow our portfolio here in this market.
And is it just like tougher to find opportunities back in Asia, or is it, you know, a combination? Is it push or is it pull more, do you think?
I think there's both, actually. I like to look at macro picture. I think Asia had a very, very good run for save it a blip in the financial crisis. But other than that, it's a good run for almost 10 years.
Yeah.
So where value has appreciated to such a level, so we're looking for where are the value proposition. So we just felt that Europe is a market where there's a good 5 years more to
The metrics
gain,
are right.
yeah.
The macro is the story.
Correct.
Is there.
The story is there, and this is really a place to invest in.
Good.
Yeah.
Thank you. Grace, very funny that you say that Chinese investors are like everyone else, because my next question was, I think people tend to think of Asian investors as being very relatively homogenous, whereas I think actually where you look closer, you'll see that investor behavior varies quite differently from Hong Kong investors to mainland China investors, Singapore, Hong Kong. So wanted to get your thoughts as to this topic, and also what do you think differentiates yourself from your competitors in the region? John, you probably have an interesting perspective, being a man from Newcastle, working for
Yes.
Dorset, which is based in Hong Kong.
Yes, very much. I was just echoing what Grace said. I mean, essentially, it's a universal language of investment is just to make money and profit, and that's not different from anyone else. And where we look at it, we're obviously based in Hong Kong. Hong Kong is our head office. We're on the Hong Kong Stock Exchange, but we are very familiar with the UK and Europe, and my boss, the Chu family, has been educated in England as well. So in terms of their understanding of the property market in the UK, it's quite in detail. And yeah, well, obviously I'm from Newcastle, and there is a bit of a language barrier anyway. But the way that they deal with me is very sensible. They're very articulate in English. Actually, they speak better English than myself, and so we get on really well. I think just in terms of every day is different. Every day is an exciting day. There's for good and for bad. But I think the difference, which I've historically worked in the development sector in the UK, and now this is my first time working with an Asian organisation, and their perception of life is a lot different, and it's actually quite refreshing. It opened my views to life, and everything's big, which is great. I think their philosophy is very good, and the way that we deal in business, very honourably, is really refreshing for me. But all about making money really, and it's all about getting the right deals.
Yeah.
And finding those and trying to drive value. So ourselves, we do hotels, we do residential, but in terms of what we look to do is we look to get it in at the right price in terms of entry, and then through development add the value, and then operate it at the end of it. So we're quite unique in that sense. But again, it's just acquiring for us. It's acquiring to develop and then to add value at the end.
Right.
But it's a pretty simple message, to be honest.
Right, so it sounds like not too many differences, a lot of sort of shared values depending on the fit between the individual and the company.
I think that's the same with any business, to be honest, whether or not it's from Hong Kong or from China. I think you've got to get on with the values and the philosophy of the business.
Sure.
Without that, it's a non-starter. So, it is a bit interesting when people... I'm in this panel today, and obviously I'm the only UK native here, and it is interesting. But I think also the facts are that I just enjoy working with them. We get on well.
Fantastic.
So.
Alan, Frasers is based out of Singapore, but I think your biggest shareholder is Thai. Do you see any sort of big cultural differences?
I think back to your first question in terms of whether you see, I agree with all of them in terms of you shouldn't really look at investors by country or races or anything, but it's more the category that you have flashed on your second slide, whether they're institutional, private equity, or tycoons.
Yeah.
And around the world, they will act the same way as long as their money comes from that source. So in that light, if you look at our major shareholder, he is a tycoon from Thai. So be it Russian, be it China, I think the tycoons act the same way. Entrepreneur, and they some of them actually didn't born with silver spoon,
Yeah.
so they are very shrewd. But I suppose from Fraser Centrepoint, our parent company perspective, we are a listed entity in Singapore. So definitely it is a institutional setting. We have governance. And the fact of the matter is that he actually acquired it and kept it listed is to ensure that we have the rigor and the discipline to continue to work through investment com and a strategy to grow. But I suppose in that light, the objective is clear, why he actually wanted to acquire Fraser Centrepoint Limited and use it as a vehicle to help him grow in a more strategic manner and disciplined manner. And therefore, I don't see there's any cultural change, differences, objective in that sense. But more importantly is that we may be able to marry the best of both worlds in having him with a more shrewd and entrepreneurial mindset, sitting as a chairman to use this vehicle, but with a more business-savvy angle. And the truth of the matter is that since he has came on board, Fraser had actually done a lot more. We will definitely in the last 18 months done a lot more than the past 7-8 years that Fraser has been as a listed entity under a more professional board, so to speak. Yeah.
Great, thank you, Alan. I think some of the people in the audience would be keen to know what have some of your group's challenges been in investing in Europe, and what advice would you give to other first-time investors from Asia based on your experience? Grace, I see that KPMG has awarded Rainwood with the best Chinese investment in the UK with your recent acquisitions of 10 Trinity Square and also Wentworth Estate. So you are probably well placed to answer this question.
I'll try. Rainwood has indeed made some very high profile and significant investments over the past 2 years, particularly in the UK. As you probably all read, 10 Trinity Square is, of course, one of them. It's an ongoing project, very much on my take. And it will probably, if all goes well, open last quarter of 2016. It's a very ambitious, bespoke, sophisticated project by design. And we're very happy to have signed up one of the best hotel companies to help us manage, which is Four Seasons. And what I want to say is because of the nature of the iconic building that it is, because it was built in 1922 as the Port of Authority building, it's a very complex conversion. So I think for first-time investors into Europe, you know, maybe a note of caution that may not be necessarily the easiest challenge to undertake for a first venture. But what I'd like to say is that it requires a certain vision and unwavering dedication to see through the development, and also engaging, you know, considerable resources to the project. And it's not for the faint of heart. So, you know, we're there. We're definitely seeing it through. And we're surrounded by, I think, a battalion of experts. We have some in the room, which I'm happy to see. We have, you know, Gardner and Theobald as our cost controller and project manager. We have KPMG, we have Meyer Brown, we have Foster's. You know, we're really well surrounded. And I think I would, you know, recommend that to, you know, investors, first-time investors, to be well surrounded.
That's a very good point. In our capacity in executing transactions here in Europe, we have found that the investors that tend to have the most success tend to be the one that do invest in advisors, and, you know, where they're not as people are laughing, where they have help on the ground. You know, they're not so familiar with the legislation, tax, and so on and so forth. You know, it is costly, but it seems to be a worthwhile investment, and it certainly gives a lot of comfort to on the vendor's side as well. Alan, let's just continue on this topic. I mean, given the weight of international capital looking to invest in Europe, not just from Asia, right? You have competition from the US and elsewhere. Besides being competitive on pricing, what else do you think that new Asian entrants can do to be as successful in transactions and to help allay any sort of vendor concerns on ability to perform?
I'll pick up on Grace's point as well as what you just said, consultants. It is a very important point, but to differentiate yourself a little bit more, your due deal process, which is actually going to be one that increasingly shortened as buyers or sellers are getting more impatient since this is a seller's market with the weight of the capital chasing deals. So to differentiate yourself, if you could actually, being new to the market, start getting your consultants on board even before you have a deal and put them on retainer. Get your team ready so that the moment you had any deal go on, you can just mobilize them without any problem. And that will set you aside, because a lot of time, the few good ones, like what Grace just mentioned, probably a lot of people will start looking at them. And the lawyers, the consultants themselves will have to start checking as to whether there will be a conflict of interest amongst each other and try setting up different teams with China war here and there. So those take time. And if you actually can get your team ready, put them on retainer and mobilize them anytime, that will set you already way ahead.
Yeah, and it's a good sort of signal to the vendors as well, right? They're like, okay,
yes,
these guys are serious. Exactly.
You're serious. And of course, if you're new, it doesn't mean that you don't have a reputation elsewhere. If you have a good reputation of closing deals before, that will always help bring that forward, that you are a closer. You are not someone who actually drop halfway. And I think the other one that the seller doesn't like is always a retrader, yeah. People who put in high bids and then come in and find little faults and retrade. I suppose that is not a good reputation, and I think that that's something that you should try to avoid.
And the word spreads in the market. Once you do it,
Yes,
then you have that little bit of that reputation. Picking up on that, people have this perception that Asian investors tend to be a bit slower. Do you tend to agree with that?
I suppose slower, probably in the sense of maybe unless you are not familiar with the market, you may actually take a while to digest. But I guess in general, probably in this case, you may have to be a little bit more, go into the
competitive process, no?
Yeah, I suppose, yeah, the different culture, that's come into play. I think Asians do err on the conservative side more.
Okay.
But having said that, I mean, again, the recent spate of Chinese capital has proven us all wrong in terms of what they've been paying. To a large extent, it reminds us of how the Japanese were in the early years when they first came out. I see them as probably maybe paying some tuition money.
Right.
They will all learn at some point in time, and they will become smarter and sharper.
I like that.
I think we all do that, yeah.
Yeah, that's true. Great. Now, I think people in the audience would be interested to know as well, how do you guys source deals in Europe, and where are you finding the most success? If someone in this audience was trying to put a really interesting opportunity to you, what's the best way for them to reach you, other than coming through Eastdale, of course? David, is it tough building a platform from Singapore? A deal pipeline from Singapore?
Actually, for Europe, it's I don't find it difficult at all, because I've got friends like Eastdale who's always on a call to us. So that's really helpful. But also a bit of background as well, because I've lived in the UK for a couple of years and I worked there. So that sets a tone for me to know the different parts, geography as well as the culture and so on. So that helps a lot. Of course, coming from Asia, actually, to be prepared to travel at short notices. And that's what we need to be able to do. And like what Alan mentioned, get your team ready. I think financing, duty team, legal, accounting,
And that's also a good source of information, isn't it?
Yeah. Yeah, that's right. That's right. So I don't find it difficult at all to
Source
source
deals,
deals here
right.
in Europe at all. Yeah.
Okay, fantastic.
Can I jump in here?
Yes, please.
Because I can't let this opportunity off because my colleagues are all here.
Development
and,
team's all here.
My head of Europe, Mr. Goose Barker, is sitting right in front of me, so I have to introduce him. If there are any deals besides Sulin, who's very nice to approach, of course, a very tall and gentle gentleman is always available here. And in fact, Marcel as well, who helps him, is seated in front. And another colleague of mine from Singapore, Colin, who looks after the REIT side, which we will talk about later. I know there are questions on that. Is also here. So we do have a team here in Europe and has been here for the last 13 years, I just learned. So Goose has been here for a long time.
Yeah.
So we know the market, yeah.
Yeah. Sounds like, I mean, even though we're all from different places, it's important to have somebody who's got, connections and eyes and ears on the ground. And that's probably the case for you, right, John? I mean, that's probably a nice angle for Dorset, having you on the ground here.
Yeah, I mean, I've got a slightly different take on life.
Okay.
And I would I, because I'm actually from the UK. I think it is very important you get the right consultants and team around you, without doubt. But I also think you can't rely upon them to make decisions. So you really need to have someone on the ground who has got your best interest at heart, which is the company's interest. So although that you do, we use lots of consultants. It's really important that the decision lies with me, and I'm the face of the organisation. So I think if just to touch on what Grace mentioned before in advising people, I think it's important that you do have someone you can trust on the ground.
Right.
And we've actually found, and I'm not just saying this because of the activity which we've done in our business, but we found that we've been able to get a lot more traction because of using my historic contact base. So we've got the strategy from Hong Kong, but the connections and relationships on the ground through not just myself. I've got a team of 7 people. One of them's in the office in the audience today. So there is a lot going on with that, and I think it's really important. I mean, for us as an organisation, we started originally in Hong Kong, but we're now one of the biggest developers in Australia.
Right.
And again, how we did that from 12 years ago, we've got 6 million square foot of residential development in pipeline or under construction in Australia at the moment. And that was really born by the fact of connecting with local people.
Right.
And now we're sort of getting sources of land from working with councils, governments, and obviously from a development perspective, where you're working with a council, it's a better relationship in terms of outlay, obviously. So, but you just don't get given these things, and actually, I also think that driving the deal. Especially from a development perspective, is not just about buying the site. As Grace, I'm sure, is finding out at Trinity, it's all about knowing the council, going through the planning process, knowing the right architect to pick, then looking at the contractor, making sure. I mean, at the moment, we had a discussion earlier on, construction industry in the UK, specifically in London, is very hot at the moment, and that means that they will only deal with people that they've got a relationship with. And when you're in that market, no matter how much money you throw at it, it's still not going to get the right result. So I think it's really important that if you do and looking to develop anywhere in the world, really, you have a local connection, local responsibility. And I think we found that to be a great success in when we started in Australia, when we went in Malaysia, and now obviously in the UK. So yeah, it's interesting, but I think that's what I would say as an add-on to the last question, if you've given someone advice. And obviously the consultants and stuff is important as well, but yeah.
Okay, very interesting. I'm conscious of time, so I'm going to jump around a bit. I think with all the high-profile transactions that you hear about, you know, the Waldorf Astorias and the Baccarats of this world, and some might say that Asian capital is in danger of overpaying for the offshore acquisitions. Is this a concern you have to deal with your investment committees back home? And what other factors come into play when you're doing, you know, underwriting for your respective groups that, you know, perhaps differs from other investor groups? Grace, maybe you can give us your perspective. What's your experience so far with Rainwood and maybe your dealings with others of mainland Chinese investors?
I can only speak for Rainwood. I cannot generalize and speak for all the other mainland Chinese groups, but I think there is a process, and I think some of my colleagues here have talked about this, and you've listed those categories are very interesting. So I think when there's a project that we look at and that we like, and that is actually sort of validated by our chairman. And we'll go through the same assessment route that all international companies go through, and you look at the economics, you look at the upside of the deal, and then you decide whether you pursue it or not. I would say we're not in the business of overpaying, at least we'd like to think so. But perhaps unlike other short-term investors, I think we have a tendency to invest more post-acquisition. And what I mean by that is that we'd like to ensure that all the capex are done with quality and high standards. So we don't have a tendency to chintz on that. Some of the projects, as you were talking about, take a little longer to mature before a deal is made. And others that I have observed since I've been with the company, such as the soft drink business, has actually been relatively quick and decisive. So it really depends on the opportunity. I would say the only thing I kind of have doubts about is with the recent high-profile acquisitions of hotels, and that some of them you're author to. There's certainly midterm risk exposure, which I can see because they paid fairly high prices, and the market could change, as you all know, quicker than we think. And there's a lack of in-house expertise in some of these groups. So, I think I represent the hotel arm for Rainwood. So, having been a veteran of this industry, and I think all these gentlemen around the table are the same. But if you don't have that in-house, then it's very challenging to develop very ambitious projects thereon.
David, you work for a pretty iconic and well-known Singapore billionaire as well. What's your perspective?
I think he has paid the tuition fee 20 over years ago.
Okay.
And when I came on board, I was pretty amazed at the number of contacts he has out there to be able to check and cross-check to make sure that he doesn't overpay. Yeah. But he's an entrepreneur as well, and therefore, when there's a deal to be made, he's there quick and fast. So he's done his homework, whether it's in the US or Europe or back in Asia. When he wants something, he will act fast on those. So I think, again, investment is really talking about, it's like going into an auction room. You like that, price in front, but you have a certain price threshold in mind. You're going in with a bid, but there's a certain point in time you've got to say, no, this is just not for us. And I think we have enough resources to be able to pull together and decide. I suppose the other thing that as a wider associate company within the group, we have 120 hotels under Millennium and Copthorne, so very different parts of the world. So I do have the benefit of having a chat with some of my distant colleagues.
Global intelligence, yeah. So it sounds like both of you disagree about this whole perception, and there's definitely a lot more to play when it comes to the investment considerations.
Yeah.
Good,
Thanks.
good. Well, let's jump back to Asian REITs. We're very lucky to have two of our panelists from the strongest hotel REITs in Asia, which is obviously CDL and Frasers. A few questions for you both. Maybe we start with Alan. Frasers is an established global owner of hospitality real estate, but you are relatively newly formed REIT today. What has changed, since you have listed, and is it impacting the way you look at current and new investments?
Yeah, I think Frasers Hospitality traditionally has been really focusing on building our brand and in the service residence space, which we still are very committed to. The only difference, of course, in a year ago when we actually listed the REIT, Frasers Hospitality REIT, the mandate that the REIT has is a lot broader. We have 12 assets in there, 6 Fraser owned and managed, and 6 are really third-party managed hotels, global. So the mandate is actually just a hospitality space for service residents as well as hotels, and in the global space. So the difference definitely is that now we don't just look at assets that we can rebrand and operate as a Fraser property, but we look at hotels as well that is suitable to be injected into the REIT for growth. So that is the major, I think, change and difference we over the last, I think, 18 months that we have been preparing for the REIT to be launched.
Okay.
Yeah.
And David, back to you. CDL H REIT, I think, was the first Asian REIT formed, was it 2006? How has the competitive landscape changed over the years? Are you seeing more competition from new REITs like Frasers to you right now?
Competition, I think we are friends, industry friends and colleagues on stage and off stage.
Yeah.
So actually the competition is not so much just the Asian REIT alone. I think the market has grown. And you can see that years ago there wasn't much, there's not a lot of interest into Europe, for instance, but now there's a lot more interest into Europe. And there's also the more sellers as well in this market. There's a lot, so the market has changed. So I think competition for us is not just talking about from Asia, but really if we're looking at an opportunity, even let's say in theory if this hotel would be for sale, we'll be competing against the US funds, European funds, Middle Eastern, and everybody else.
Yeah. And what sort of yields do your respective REITs require in general, if I may ask?
Definitely. I believe if I could answer that in an indirect way, I think we have to be realistic when we want an asset. I mean, if it's no point coming to Berlin and say that, oh, we definitely need 7 or 8% cap. We're not going to find a deal here. So wherever we go, we have to be realistic with the market. If we think that the yield in a particular market is not going to meet our investment criteria, I'll probably say quite clearly we're not looking in that market.
Okay.
So actually, for us, we've identified actually Western Europe. Most of the key capital cities or countries met our EU criteria.
Okay.
So it's really about finding the right deal to be able to move on to it.
Okay.
Yeah.
And Alan?
I think I'll be a bit more direct. I think we need about around 6 non-levered basis. But again, it's something that is probably getting more and more challenging as we look around. But of course, it can always be structured.
Sure.
You can package together with other stronger yielding assets that you have to launch it together to the market so that the market can still accept it. But I think in the longer run, you definitely have to have a stabilized situation or yield that is yield accretive to your REIT. Otherwise, the market won't forgive you.
Okay. Let's turn to financing. What do Asian investors tend to do in terms of leveraging their purchases in Europe? I think the common perception is that Asian investors will like very modest leverage. They tend to depend a lot on the relationship and home banks. Is this still the case, or are we starting to see a little bit of a change? Ellen, I'm going to come back to you because you've got a lot of experience here, in Europe, from your GIC days. Do you see any sort of consistent trend, or is this changing?
I think it's interesting again when we look at, okay, there are two institutions here, the banks, right, who are the lenders, and then the borrowers. The borrowers are talking about the Asians versus the rest of the world. Are Asians really very different from the rest of the world? Is that culture thing coming into play again on leveraging? Are we more conservative? I think if you look back again, back to 1997 when the Asian crisis hit, that is when I think the Asians learned their lessons. And IMF came in, we all tightened our belt, took the bitter pill, austerity drive. We did not renege, not like some of the countries that are trying to get out of it, but we took the bitter pill and we learned the lessons and we got out of it. And after that, we restructured and actually started to be a lot more conservative with our LTV, our lending. So much so that when the GFC came in 2008, the Western world had it, but the Asian countries were pretty okay. Of course, it's a global financial crisis.
Yeah.
Everybody get hit, but not on the deleveraging front. Asian properties doesn't need to go through a huge deleveraging exercise. We are well placed, but that discipline has stayed of taking 50%, 60, 65 at most. Kind of LTV level, which is a lot more manageable when you talk about asset value being hammered. Yeah. So I think the issue is that then the banks themselves actually also need to learn the lessons as to, I mean, you know that they have too many NPLs that they have to deal with. When they finally dealt with them and the market is better, they will become a lot more aggressive now. Are they going to lend to the hotel sectors, which is normally the most risky sector that they will actually enter into? All this comes into play. So for whether is it Asian or Western, I think we all like to deal with relationship banks.
Yeah.
I think that is a natural thing. You want to go with relationship banks first because they will give you the best deal. But I think as far as whichever bank that can actually gives you the best deal, you will go with them. And for Asian lenders, they would more and more be looking to diversify as well when they come to this part of the world and not necessarily have to stick to their Asian banks back home. Okay. And I think as the European banks are more open to lending back to this sector now that I think the situation and the economy is getting better. We can see that I think the leveraging is slowly picking up again. I believe the European banks can actually also be very much banks that will lend to Asian borrowers.
Fantastic.
As far as LTVs are concerned, I think memories are always very short. It's creeping up now, I think probably from 60, 65 again. Let's hope that it doesn't go to the 70 or 75. When I heard some people started saying that, it's like, oh, it's like, it wasn't too long ago, you know. And we're still trying to get out of that with QE being lavished. So we just have to be a bit more cautious. Okay. After how many crises do we need to go through to be wise?
Okay, good. John, I'm also curious to get your take because, you guys do a lot on the development side. Do you talk to a bevy of different financing options?
Yeah, I mean, I've seen both sides of the coin. I was doing residential development when I was getting 110%. So it's quite unique to go sort of the other way. For me, obviously, relationship banks very important, and we've got, through the FEC and the Dorset, we listed on the Hong Kong Stock Exchange. We've got, a good parent company guarantee. We've also got some very good relationships with banks in Asia, so they tend to give us the best rates generally, and also, it's cheaper debt effectively. But in terms of, we actually don't do LTV, we do more development cost.
Sure,
so we go up to about 55% development cost. Again, it's not my area of expertise, but I know pretty much where it needs to be at for the commercial terms to work out. So that's what we're doing there. I mean, I think for me mostly is that it gets back to, you know, localising development again. We've obviously got operational activities going on as development. Operationally, we actually are looking to retail bank with UK and European banks. On the development side, we are actually getting it from to get the debt from Asian banks. But I think moving forward, if we are looking to build, which we are, a property development company, then we will have to forge and have relationships with UK and on the ground. So for us, I think that the short term is, yes, we will use Asian banks to get our debt for development, but I think the longer term view is we'll hopefully get to deal more with UK and European banks, which I've got to say are more, on the development side, easier to deal with.
Okay, fantastic. This one's for everyone. What sectors of the hospitality industry are most attractive to you currently? And, you know, both in terms of asset class and in terms of geographies. Are there any big absolute no-nos for you? Maybe we'll start from the end, Alan, coming down this way.
Again, for us, we're quite focused in the sense that we need to chase yields for the sake of our REIT. So for areas and regions that we actually can still support our yields will really be Europe and Japan and Australia to somewhat. These are regions that we are looking at. Product type is really city centre that we have actually been quite established in, and we know that, as opposed to resorts, which we don't profess to operate or know in that space. So we normally do not touch those.
And do they have to be cash flowing assets, or you look at developments and also operating platforms?
Yeah, we do look at development. Yeah, in fact, we have several in the pipeline actually.
Okay. David?
Yeah, thanks. We tend to, I think at this juncture, we tend to differ slightly as our focus is mainly on completed operational project because development takes time and a lot of effort required. So we tend to put our effort into just acquisition of existing hotels. That said, is also we are open to looking at opportunities whereby you buy a hotel, then you put 20 million euros into it to renovate it, provided it's in good location. So our focus is really in the key capital cities and giving us that return. We do also look at portfolios. So to us, it's rather than picking up individually, is if we can one shot pick a portfolio style investment would be better for us.
Okay.
Yeah, and resorts, we are open to it as well, but I think not our first deal in the country.
Yeah.
Yeah, sorry. Yeah. We've bought 2 resorts in the Maldives, and that was really good. It gives us really good return, actually, recommended. The yield is just tremendous. I mean, I know some of the European resort areas gives you that stability and, and that yield is much higher, and it works for us really good. Yeah, yeah, that's right.
We'll go do the.
That's right.
And Grace?
Well, we're focusing on gateway cities, I would say, in Europe and the US, and then again, quite narrowed down. So we don't have the same objective as perhaps hotel companies that need to be strategically located everywhere. And so we have a different sort of starting point. We have invested recently in resorts as well. Rainwood has invested in Hawaii, and so that's a development type of situation. But we have local partners to do that project with. We would not do something like that in such a remote location without a local partner. And then, as I had mentioned earlier, I think we continue to look for assets where we can create value. And so preferably, I think, after this experience at 10 Trinity and all the challenges of the construction side, that we would try to find something which is probably an easier type of fit.
John?
Yeah, I'm not too sure that opportunity exists. To be fair. Well, for us, I think we're the biggest hotelier in Hong Kong, so we've 1 in 10 hotel rooms is under our ownership or management, and we obviously through that get a lot of Chinese tourists, and we're not too shy and say that we follow the Chinese wallet. So really looking at leisure-based locations.
Right.
So in terms of UK, Edinburgh obviously is one we were really keen on, and Manchester with the direct flights now. So we can tick a box in terms of that. So they're the real sort of hotspots for us at the moment. And obviously London. I think we do development. So again, it's really about the entry price. So I wouldn't suggest there would be any no-go areas for me. It just becomes a bit harder to get it through at board level. But we obviously do residential as well as hotels. So the combination of the two works quite nicely for us. So opportunities where we've got both use classes in there would be more attractive for us. I quite like the service department sector. We're not in that sector at all, but I know that there's an inherent undersupply, and obviously the guys, when you walk around, you see the new people launching, and they seem to be doing pretty well. So I think that's probably a space which you may see a lot of movement on in the next couple of years. But yeah, I mean, I think really needs to be sort of leisure tourist-led locations at the moment, just in the UK.
Okay, fantastic. I want to leave a couple of minutes for Q&A, but I just want to close off with a couple of punchy questions. I want to hear sort of your off-the-cuff punchy answers as well. I'm going to ask each of you one question each and give me a sort of 15 to 30-second soundbite. Maybe we start with you, David. What advice would you give to European sellers in dealing with Asian buyers?
I believe be patient with us. The intention is there. Again, with familiarity of markets and so on, and don't underestimate the issue with language. We just closed off 2 transactions, acquiring 2 hotels in Tokyo, for instance, even right in Asia, and not a fluent Japanese speaker or reader. It's been proven quite, everything needs to be translated, and that takes time. Even our lawyers as well, I think we're driving them a bit up.
Patience.
So yeah, patience, yeah.
Okay, good. And Grace, I know we talked about this earlier, but what's your most important criteria in investing in new opportunities today? Is it yield? Is it replacement costs? Price per square foot? Or is it, does the chairman like it?
Well, I'll try to sum it up this way. I think it's thoughtful and inspiring assets and enterprises, which promotes well-being in body and mind, and which has potential value for growth and prosperity.
Very, very diplomatic. And John, what causes you the greatest stress in your current investments, and how are you dealing with it?
Yeah, I have regular massages.
Good strategy.
Yeah, stress. I mean, I think at the moment, if I'm being honest, it's what we want to touch on before is where the construction industry's going.
Right.
Because even though values are still strong, the construction industry is doing very well, which is great for a contractor, but not so good for a developer. So I think that is probably my biggest stress at the moment, getting the right contractor.
Okay, good. Give the most difficult question to Ellen. What do you think we'll be talking about next year when we're back here again that we haven't touched upon today?
I think one thing that when I thought through the whole session today, the questions that were asked, Definitely one important one, which again is macro, is really the Fed and its interest rate situation, which we didn't touch at all. Everyone is sort of imminently expecting Fed to raise interest rates. Whether has it really been priced in? Do we know the impact and the effect? We probably next year we will know whether the cap rate still goes the way it is. Although, of course, ECB has just launched another QE. Japan has also going through QE. China is not looking that great. So I think for once, after the GFC, the global financial crisis, we see a lot of, we are seeing decoupling of interest rates movement, where US may go, may raise and the rest of the world may be hanging there or lowering. So once you have a decoupling, I think the whole situation got a lot more interesting and exciting, because you can't tell as easily that everything goes together in the same direction when we are in a crisis situation.
Fantastic.
So, yeah, we'll see.
Thank you. Thank you very much, all of you. I know we have about a couple more minutes, maybe 5 more minutes. Any questions from the audience today, please?
I'm an investment and acquisition lawyer in Spain, and I would like to ask you, to the companies here today, that as you know, Spain has become a very interesting market for Asian companies like Dalian Wanda and all these deals, very popular last year. So I would like to know, what is the strategy of your companies regarding Spain as part of Europe?
Maybe David?
My next trip to Europe will be Spain. Okay.
So, answer's yes.
For us in Frasers, we actually were quite fortunate. Last year, we already acquired a property in Barcelona, which we are currently rebranding and relaunching as a Capri, our 5th brand of our Fraser collection of brands. We are very interested in Spain. The long and short of it, we're looking at Madrid to close the loop, more in Spain, more in Barcelona, because it's a very smallish property. We can take some more. We like, I think, Spain. We would like to have more. Yeah.
Great. Sounds very positive. Yes, sir.
When Asian investors invest in Europe, is this primarily to get later Asian tourists and business people to these hotels, or is it seen rather than a pure investment?
Well, John, you spoke about this earlier. A lot of the angle is...
Well, I mean, for us, it's very much an investment in its own right, which adds value and makes profit. So whether it's in Europe or anywhere, but we obviously have seen an influx of tourists to Europe, and on the hospitality sector, we want to take advantage of that by getting repeat business. So the way that we look at it is we are acquiring an asset, and we'll hope to drive value through the development process. And then at the end of it, when we operate, we've also got this link in from Asian tourists. And I think, you know, the figures speak for themselves with regards to tourists coming out of China. So why not? I think it just gets back down to location, making sure that the asset you're choosing is performing or can perform well. And I think that really drives it. For me, in terms of our business, historically, Hong Kong is very expensive. China, within our organisation, has been identified as a location which needs to cool. So we haven't invested in China for the last 18 months to 2 years. So the focus is really on where we can accept and get more value, and that's Europe. So that's really.
Yeah. And I think it depends on the company, right, and what their focus is, because I would imagine for Rainwood, maybe less of that angle of, you know, bringing Chinese tourists over, is building a world-class product, isn't it?
Yeah. It's also the residents, because obviously we're 41 super prime residences that we are marketing, and that is very much targeted to the Asian market, but as well as UK and anybody else who'd like to, you know, take it on.
I think there was a gentleman at the back, yes.
Hi, good afternoon. My name's Paul Sherwood from John Randall Buttons. We're property construction professionals.
John's favourite friends, yeah.
John mentioned one of his biggest stresses was finding the right contractor. Now, I won't offer him a massage, but...
It's a shame.
No, you definitely don't want one.
Yeah.
But is there any way that you do or could do encourage contractors or your supply chain to sort of sharpen their pencil for you or to work better with you?
Yeah, I mean, yes. I think it gets back down to what we discussed last time about relationships. What we're trying to do is to create a framework, which is actually across all our supply chain, not just construction, so that the volume of deals that we're looking to do is enough to share the supply chain with regards to development. So I look to try to reduce the competitiveness, gives them more comfort that they'll be getting the projects. But I think the biggest thing really is to forge the relationship, work together, demonstrate that we're paying, because I think one of the issues is that we're finding with new construction companies that we're dealing with, they have now got the work in Europe as well as Asia, so they're a bit hesitant when dealing with foreign organisations, making sure they're getting paid. So if you've got a track record of paying these guys, then that helps. But yeah, it's difficult.
I think that's a great answer. I think it's the lead time and the payment from payment.
Yeah, yeah, and knowing what you want to do, which is our problem. Yeah.
Okay, I think we'll close off our session for today. Thank you very much again to my panelists, and thank you for attending today, everyone.